Welcome to Grow Your Business and Grow Your Wealth. Gary Helt is excited to bring you another powerful conversation to help you grow and protect your business and finances. Today's episode is hosted by a special guest, personally selected by Gary, so you can keep learning and moving forward even when Gary is off the mic. Settle in and enjoy today's insights.
Hello, everyone. Thank you for joining us today. We're having a podcast with Rob Brand, who's a tax advisor that I've used personally. I've known him for years, and he's joining us today to let us know why he loves what he does and how he can help you in your business. Hi, Rob.
Hey, Sam, how are you? Thanks so much for reaching out. I appreciate it.
Absolutely. Good to see you.
Thanks again. And I appreciate the opportunity to talk to you and other business owners out there. I do what I do because I like to work with people, and the best part of my day is working with the client and coming up with a solution that's valuable for them and helps improve their business or something about their life. My goal is to help my clients keep more of what they earn, and we do that through tax strategy, or strategies to take a look at how the income comes home to the privately held business owner, and working on ways to increase or achieve better tax efficiency.
Awesome. Is there a lot of room in that space for people to improve upon?
Absolutely, absolutely. One of the places that we see a lot of opportunity for improving tax efficiency is with owners of LLCs. LLCs, by definition, with one owner, are treated as single member LLCs. LLCs with two or more owners are by default treated as partnerships. Both of those particular tax elections result in net profit being subject to self-employment tax. There is opportunity for those business owners to change their tax election if it's appropriate, if it's the right fit for them. But one of the other options available as a tax election is to be treated as an IRS subchapter S corporation. And in effect, what that means is the net profit from the business is not subject to Social Security and Medicare tax.
Well, that's quite a bit of the taxes that people pay.
It certainly is. And so in a single member LLC or a partnership, the first roughly $170,000 of net profit is subject to self-employment tax. And in effect, that money is taxed at the ordinary income level, because both single member LLC owners and partnership owners are owners of what are known as flow-through entities. That is, the business income flows over to the business owner's personal tax return, and that is where the tax is calculated. When the income for both of those types of entity flow over, there is a calculation to not only achieve what the ordinary income tax rate should be, with that income combined with other income at the household level, but also that income is subject to a 15.3% tax, which is paid to Social Security and Medicare.
I would say on the low side, our smaller business owners are generating $200,000 to $250,000 a year in their LLC. How could working with you impact someone whose gross receipts are $250,000 a year?
If the net profit is $250,000 a year, again, the first $170,000 is subject to self-employment tax. So there's a potential for a savings of $26,000 just in self-employment taxation. Now, there's a caveat, and anybody who's looked this up online will know that the IRS requires that the owner of an entity taxed as an S corporation who is active in its day-to-day operation is required to take reasonable compensation from that business. And in short, what that means is they have to bring some of their income home from the business subject to self-employment tax. But when your company is taxed as an S corporation, you have an opportunity to manage how much of that income is subject to self-employment tax. And that is one of the things that I would like to say is the special sauce that we bring to the table here at Comprehensive Business Services.
What does an ideal candidate look like for you when you're working with a business owner?
That's a great question, Sam. Thanks.
Yeah.
An ideal candidate for us, and let me say it differently. Our practice is set up. We are designed to work for owners of privately held businesses. That is, owners of LLC or closely held corporations with small groups of ownership. Primarily, we deal with individuals. We have spousal couples, or we have, groups of 4 or 5 individuals who are the owner of a company. Again, the goal is to identify ways to assist each individual owner with improving their tax efficiency and helping them, develop a tax strategy to achieve their goals. So an ideal client for us is a privately held business owner. We don't do work for publicly traded companies. It's just outside our wheelhouse. We're not set up to deal with that well.
Correct me if I'm wrong, but isn't one of the advantages of having the S corporation IRS election something to do with an SEP IRA, or doesn't it expand how much money the client is allowed to save for retirement as a tax deduction?
Very good question. So the S Corp election does have some interaction with the ability to contribute to varying types of retirement accounts. SEP IRA is a type of retirement account, and what that is SEP stands for self-employed pension, and the rules for that type of pension to achieve the contribution allowed by that type of pension insist that the contribution can be up to $70,000 per contributor, but has to be 25% of the amount of income the business owner has taken subject to self-employment tax. So somebody who is contributing $70,000 has maxed out their W-2 at $170,000, so is paying self-employment tax on the full $170,000. But if cash allows the opportunity to take a W-2 of $170,000 and have $70,000 additional to put into a SEP retirement account, it's a great tax savings. So yes, you will pay the additional self-employment tax through your payroll, of course, so it's a business deduction, but you'll also get a $70,000 company sponsored, that is complete reduction of company net profit contribution to your retirement account. So yeah, that is a valuable tool that we use with many of our clients, Sam.
I can think of a couple clients right now that make more than $1 million a year that are stuffing the money in the bank and checking account. They don't trust the stock market. They don't trust, I don't know, but because this SEP IRA, how would this help the people that are just
well for individuals like that? There may be other types of retirement account that allow larger contributions. There is a concept called a defined benefit plan, and that offers the opportunity to contribute up to $205,000 per individual business owner. That number is determined actuarially based on the business owner's age, the business owner's sex, the amount of business generated, amount of income taken by the client. So there are many factors that go into it, but the opportunity to put somewhere between $70,000 and $205,000 a year per individual business owner is a real tax savings. There are other.
How does health insurance do they get any breaks on health insurance from being an S corp election or not being an S corp?
Not really. It sort of feels like nobody gets a break on health insurance. It's expensive, and we all end up bearing the cost of it. It can be company sponsored, but then must be picked up as compensation to the recipient. The recipient can then write it off on Schedule A, but they have to be in a particular tax situation where their itemized deductions are greater than the allotted standard deduction. And as we all know, the standard deduction increased with the Tax Cuts and Jobs Act of 2017. So itemized deduction taxpayers are few and far between anymore. However, some of the business owners that you're talking about, Sam, that have large mortgages on multiple properties,
Yeah.
make a lot of charitable contributions, or individuals who are at the later stage and may sadly have more medical expenses in a given year, may be the people who are taking advantage of itemizing their deductions and therefore could take advantage of that.
Do you work with clients that have 20, 50, 100 properties, or what would you say to those people? What your value add?
What the value add is looking at how to make the business owner's life better. What value do we bring to the table? And in a situation like that, not every property performs the same. If these are held as investment properties, some are commercial, some are residential, there may be some opportunity to segment those and own them in different structures. Forgive me. Which could create different tax treatment depending on the type of property in service. There are ways to use funds in a retirement account to make investment into properties. So one of my favorite things to do is talk to a client who likes investment real estate and try and help them unlock the power of their retirement account to give them the ability to buy and hold or buy and sell real estate, except for all of the taxation is shielded because the tax happens inside the retirement account. So when you have a property, that's got a large gain, most people say, oh no, here it comes, and you got to make a payment the day of settlement. If that property is owned inside the
Are you talking about, is this a Roth IRA you're putting in real estate?
I am talking about a self-directed IRA, and that is a type of qualified plan that it provides access to the retirement account holder. It gives them closer control over their funds. So to talk to the people, Sam, that you say are stuffing money in mattresses because they don't like the stock market, if they are more partial to the real estate market, this is a way to get them a tax deduction by funding their retirement account. And then once those funds are in the retirement account, they get to be in charge of how those funds are invested and don't have to put it in the stock market. They themselves can buy and sell properties. They themselves can buy and sell specialized assets. So there's a lot of opportunity. And what I think our practice does well is we get to know our individual clients and find out who they are and help them communicate their goals. So I have people that are just happy to have a financial advisor handle all of their funds. They contribute to a 401k every year, and they're as happy as can be. I have clients at the other end of that spectrum who are terrified of the stock market or don't like somebody having more control over their money, or for whatever reason don't want to have funds invested in the stock market, but they've been really good at buying and selling properties over the last however many years. And that's where their area of expertise is. So this gives them the opportunity to use funds that they've contributed through either an SEP retirement account, a defined benefit plan, whether it's a 401k they had at another organization, and have access to those funds to continue their goal of increasing their wealth through the real estate market.
We have 1,100 clients, which means that some of them are aging out or retiring every year. Is there anything, a business valuation or any services that you could guidance that you could provide for people that are looking to exit out of their business?
We have done a handful of business valuations. What I can say for certain is there are multiple approaches to a business valuation, each one designed to achieve a certain goal. If somebody is looking to retire and wants to package up their business for sale to another business or another individual, there is some value in some tax strategy there, because the potential for long-term capital gain, for ordinary income, for uh, you know, different types of tax reporting is significant. However, to say that we are the one-stop shop for somebody who's wrapping up their business is probably not an accurate statement. I do work with firms. I have an individual who's been a friend of mine for a long time, who they specialize in working with business owners who are somewhere in the 3 to 5 year until I am going to sell my business. And that is work that we do collaboratively to get everything aligned so that when the day comes when they sell their business, they are in as ideal a position as can be. And again, what I'll say is taxes and the amount you pay is about strategy. That is looking forward, right? If you go to your tax guy the first week of February and say, hey, I got all my stuff, do my taxes, what can I do better about last year? The answer is invariably nothing. The year's already over. You don't have any runway left. You might be able to make a contribution to your retirement account. But
When's the best time? When's the best time for people to contact you to make the biggest difference in their tax liability?
throughout the year, the clients that we meet with on a regular basis, which is monthly and quarterly, even the ones that we meet with one time per year, right about now, I've just sent out my invitations to our clients with the goal of scheduling time between now and Thanksgiving to sit down, review their books, review their situation, give them as much runway as possible. So that speaks to my point perfectly, Sam. The best time to talk to your tax advisor is now. The more communication, the better he or she is able to do for you. And you know, the more
That doesn't bother you? You don't mind getting unannounced client calls left and right? That sounds like that might not be for everybody, Rob.
well,
It sounds like
it's not unannounced client calls. These are scheduled and deliberate client meetings.
okay.
I have a number of clients that I have standing monthly appointments with. So the third Friday of every month, I meet with XYZ and talk about his company. About 4 times a year, we do a pro forma tax return to make sure he's on track where he wants to be in terms of tax payments and net profit. I have a handful of other clients that we just get together, review their financials from the month before, go through any open suspense items that we have, that is transactions we don't know how to categorize, and wrap those up. We do a quick check-in, and in 45 minutes or less, that client is completely aware of what their financial instruments are telling them. They
Is
know
it
where they
safe to
sit.
say that you increased business owners' business IQ? Is that a fair statement?
I'd like to think that education is part of what we do. Yeah.
Yeah. I know taxation is a deep ocean, and because of that, there's such a wide room for interpretation and speciality.
Absolutely.
What about for contractors that are writing off or heavy equipment or real estate people that have write-offs? Is there any, maybe this is questions out of line. What is the bottom line net positive result of having a relationship with Rob Brand? How did they come into your office and how are they leaving and what are they looking forward to?
The net positive of a relationship with my firm and with me is you have a qualified tax strategist working for you. I have been working in privately held business since 1990. I have been an enrolled agent for 15 years. This is exactly the type of business we're doing and we want to do more of. Ideally, a client comes to me, sends me an email and says, I have a question. I am looking at purchasing some heavy machinery. I know roughly what my cost is going to be. How is that going to impact me at tax time? Because I either finance the whole thing or I pay cash for the whole thing. What are my different options? We schedule an appointment to meet either face-to-face in the office, face-to-face at the client's location, or over Zoom or Teams or even the telephone. And I collect some information and I ask some additional questions and I provide what I hope is a concise, responsive answer to their question. So I am here to be a valuable resource to my clients.
Do you make your clients feel comfortable? I understand that the IRS is associated with the word fear for many people. Some people are afraid to open their mailbox.
Yep.
I know one person that hasn't filed their taxes in 10 years, which is a separate question. What would you recommend to someone who's been producing income honestly, but hasn't honestly filed a tax return in 10 years? Should they come see you immediately?
They should schedule an appointment with me.
Okay. The other question that I had for you was C Corps. Is there an advantage in time and place where S Corporation? It sounds like S Corporation would be a great fit for a lot of our clients that are doing home remodeling or whatever their business may be.
Yes, so S Corps were effectively designed for U.S. residents, U.S. citizens that are active in the day-to-day operation of their business, right? Where?
What about the real estate investors, the passive real estate people?
Well, the passive real estate investor, I mean, the LLC was invented for real estate investment. A passive real estate investor likely doesn't need the S Corp election because their income is primarily, or at least predominantly, rental income, which by law is not subject to self-employment tax. But to answer your question, Sam, the employment of a company taxed as a C corporation versus an S corporation, the difference to people like you and me, that is, taxpayers, business owners. If my company was taxed as a C corporation, what that means is the company has its gross revenue, it has the same expenses you're available as an S corporation, and the company generates a net profit. The business itself has a tax liability based on that net profit. It pays 21% to the feds, and the states vary from state to state. Okay. After those taxes are paid, there is still net profit left over that needs to be distributed to the shareholders, me, and I then have to pick up that income as dividend income, which means I have to pay tax on it for a second time. I already paid tax at the company level, and now that it comes home, I have to pay tax on it again.
Doesn't seem fair.
The owner of an S corporation only pays tax on it one time. Yes, it maybe not be fair, but your question was, is there an application where being taxed as a C corp is beneficial? And the answer is certainly. If you have thousands of shareholders, publicly traded companies are almost all taxed as C corporations because it makes more sense for the company to pay its tax and then distribute the income to the investor, because you have varying levels of investment amount. You have, the person out there that has 5 shares, and then you have the person that's got 25, million shares. Yeah. And they all get treated equally per share as a C corp owner, whereas S corporation is a little closer to home. That is, your hands are generating that revenue on a day-to-day basis. And
Is there,
so paying tax on it twice just is less efficient.
is there a minimum or maximum level of income that is a generic rule, not as a law, but is there a minimum or maximum gross revenue that S corporations fall within, or is it more based on the
No, there's no upper limit on S corp gross revenue. My recommendation to people who are doing the evaluation, should I just stay a single member LLC or should I elect to be taxed as an S corporation
Is there any advantage to being a single? What is the biggest mistake that you see people, business owners making? And is there any advantage to being a single member LLC over being an S corp elected company?
so the reason people like being single member LLCs is it's simple. You don't need a payroll. Your tax return gets filed inside of your personal income tax return. So it's very straightforward, right? Whereas once that company is taxed as an S corp, it has to have its own tax return prepared,
Yeah.
and the IRS requirement of reasonable compensation is
Is one more lendable to from the banks than the other? If we were just talking about
I don't know because the entity is exactly the same. It's a state governed limited liability company with a tax ID number and 100% shareholder.
yeah.
I don't know how banks look at that. I don't know how they would differentiate one from the other.
Okay.
So
What's the number one mistake that you see business owners make time and time again?
running their business without the benefit of a seasoned professional in their circle of trust on their team.
Is it possible that I know we have a relationship, Rob, we've known each other many years. We have a relationship. Do some business people, is it possible that they have outgrown the relationship from their tax advisor and they
Absolutely.
to get to the
Mhm.
next level of performance and productivity?
Absolutely, Sam. That's a great question.
I think
And
you're that guy for a lot of people, Rob.
I love that I'm that guy for a lot of people, but I'm not that guy for all people. And so to your point, I talked to a client last week and I sent him a proposal and I thought it might not be a good fit for him. And he wrote back and he said, this is just outside of my comfort zone. I don't know if I'm there yet. And I said, okay, that's exactly right. I can't serve everybody and I don't want to. I have I believe we bring value to a big enough segment of the whole market that we can focus on being good at what we're good at without trying to be everything to everybody. And there are companies out there, like I said, we don't do work for publicly traded companies. We're not set up to provide value to them.
Yeah.
And there are businesses that are, I'll give you an example. If an individual has 3 rental properties, they're a single member LLC, all the properties are owned inside the single member LLC, there's a likelihood they don't need tax strategy on an annual basis because those are long-term investments. However, that particular person only knows that from having had a conversation with a tax strategist. So I invite anybody. My first consultation is always done at no charge. My goal is to make sure the client is a good fit for us and we are a good fit for the client. And both have to be true for there to be reason for us to move forward.
All right. I've got some spontaneous questions to put you in the hot seat if you don't mind.
Fire away.
I hear that you're a soccer player and a dad.
I like to think of myself as a soccer player. It's been a while, but yes. And I'm a father.
What position did you play?
I grew up playing halfback. I played sweeper back in high school, and as many adult league games as they'd let me, I played striker.
So you've been defending the goal for as long as you can remember. You've been a defender for your whole life, and now you're beginning to go proactively and I guess attack the other
So
side.
I learned the lessons that I learned being a defender. I like to employ as a striker.
Yeah. Well, Rob, it's a pleasure. I think we should have done this years ago. I
Well,
think
here we are today.
I think a lot of our clients definitely need to give you a call right away. We may have I maybe should have asked you that at the beginning of the conversation. I have I have one question to ask you,
Okay.
which is, do you have any clients that file, or do you have typically, I guess my question is, do you have any clients that file business returns until they die?
Well, only if they die suddenly.
They or how,
There's a point in life where you don't have enough income to require a tax return be filed.
what if they, okay, but now we're going somewhere. What if the business owner purchased a substantial or even a very large in a business owned index universal life policy to generate future revenues 30 years ago, and the sole purpose of keeping the business open is to continue receiving payments from that investment policy, and but they still want to file business returns to keep everything legal and up to date and compliant with the IRS.
Yes, business returns are required to be filed every year until the business is dissolved.
Okay, so
Individual tax returns are different.
all right, but if in the business is in cases the business is still generating a revenue or a
Mhm.
profit or an income to the business owner, then it would be prudent for them to stay in contact with you and have a business return until they're dead.
Until the business is no longer active.
Okay,
Some businesses can survive the death of the owner.
and I hope that we're one of them, and I hope you're
There
one
you
of them.
go. Yeah, yeah. Sam,
Well,
thanks very much, man. I
thank you.
appreciate the time. My pleasure, and I'm happy to talk to any of your clients.
What's your phone number or
The
we could.
best number to reach me is 302-353-0084. That's my cell phone. I am a texter. I
It's
am
302. Do you mind repeating it one more time? 302.
302-353-0084. Our
Great.
website is www.cbstaxpro.com.
cbstaxpro.com.
Correct.
cbstaxpro.com.
You got it.
Great. Well, again, I thank you again, Rob, and I look forward to hearing next time on the clients that have contacted you and upgraded to the next level. And,
Absolutely.
we all appreciate you, Rob.
You got it, Sam.
You have
Thanks
a
again,
great
my
day.
friend. Yeah, you too.
Take care.
Bye-bye.
Bye-bye.